What do you think it says that a name like NVIDIA and a $5 trillion market cap can swing 6%, 3% in a day, back and forth?
I think that it's discouraging because there's so many stocks that are just kind of left in the dust, and that's wagging the dog. But I will say, if you believe in any of this stuff, any of the hyperscalers, any of the spend, it's the lion's share is going to go to NVIDIA, not to Lisa Su. Lisa Su says that her next generation is as good as this current generation, and I don't doubt it because she looks at a lot of benchmarks before she would ever say that. But NVIDIA is still the one that has to work. It has to. So I think the great hedge against all of this is be long NVIDIA. It really is, and the fact that it swings, well, I wish others were as big, so it wouldn't. It's not happening. Right. We're sticking with the same 7 that are big, and that's a little discouraging. Doesn't mean that they're wrong. Does mean that you better get used to NVIDIA. If it's down a couple of bucks, it's not a good day.
Right. I mean, we talked about B of A and Hartnett at the top. One of the charts, I don't know if they can drag it over, kind of looks at, I guess, manias, Jim, that you'd probably call them manias, railway manias, telecom manias, shale manias.
Right.
And then they compare this one to that.
I remember the great shale super cycle, one of the most dangerous, and then this fracking sand super cycle. I'm going back over, Ben Stoto's research director for Mad Money, going back over and looking at American Rascal about Jay Gould. And I don't want anyone who is currently affiliated with, say, using a lot of debt, not having a lot of cash flow, making big claims. I don't want them to be necessarily aligned with Jay Gould because Jay Gould was more substantive.
Yes. Here's a look. This is out of B of A this morning.
Yeah, that's Hartnett. He's made a lot of money for people. That railway mania ended real bad.
Yeah.
I know that sounds really early, but it was right here in Wall Street, and it was Jay Gould was the richest man in America, building this railroad scheme. And it didn't end well. I just think you got to be careful. I never wanted this thing to be, as long as it was fueled with cash, Hartnett looked like,
right.
It was boy Clark Wolf.
By the way, getting Cisco tonight, it's going to give us additional clues.
Yes.
Stocks close to the dot-com peak.
Yeah, and we own it for the Charitable Trust. It's not expensive, by the way. Now, the last time it was at these levels, it was very expensive. Now you're talking about $19.99, but that's a company that sells at 16 times earnings. It's not the one that's historically blown up anybody.
If NVIDIA doesn't have a good quarter, then the market wouldn't be able to really move. But we know that they're going to have a good quarter.
I know.
They've signaled that,
right?
So they've told us.
It's been telegraphed by the spending of others.
Yeah,
Normally
exactly.
you have to wait to hear from the company itself. Now all you got to do is listen to everybody else.
Right. Yeah.
Right.
So that helps.
AMD today, you listen to them, their enormous growth that they're projecting comes at what? Comes at the expense. It's no accident that Meta traded down this morning based upon AMD. Because one person's, good news is another's bad, allegedly. But I think these are great opportunities to buy those hyperscalers.
Well, you said AMD. I mean, we've made it our chart of the day.
Yep.
For obvious reasons, if you take a look at the stock coming off of the first investor day that they've had in some 3 years. Lisa Su, the CEO, says the AI data center market will be worth $1 trillion by 2030. Stock's up near 9%. I thought Melius had an interesting note today. I'll quote from it. Interestingly, AMD was the first to issue what seemed at the time to be a cartoonish 2027 TAM for AI semis networking. We know now that it was too low, as AMD seems to be conservative even now in forecasting a $1 trillion plus TAM for, as I said, 2030. Joe, you own the stock.
We do, and this is interesting, and this is going to sound somewhat controversial, but from a momentum perspective, this is a new addition, and AMD kind of sat out on the sidelines. ChatGPT entered the conversation in 2023. NVIDIA, along with its other AI friends, began to rally.
AMD was, you're right, left out.
AMD
it was all
was
about
completely
NVIDIA.
left out.
Didn't have the technology.
Hold on, but let me statistically give you this. This is remarkable. From March of 24 to April of 25, AMD fell 67%. So now we're getting the realization that, yes, AMD is going to participate, and you actually have a building of positions once again. You look at the valuation and say, wait, you're probably crazy to say that, right? But no, this is actually a new entry into the momentum category, and therefore, I think it has room to go further.
You had already owned NVIDIA in your charitable trust, right?
Yeah.
And now you've added it in your broader portfolio.
Exactly.
Why was now the time to do that? We had a conversation yesterday, which was if you don't own these names now, don't buy them here. But you did. Why?
Okay. Well, I wasn't in the conversation yesterday.
Which is exactly why I'm telling you. I'm telling you what the outcome. That was the outcome of the conversation.
Thank you.
All right. So why do you say the heck with that?
Well, the stock was down, right? NVIDIA was down from recent peak to trough 17%. And we've been waiting to buy it. At the time when we bought Broadcom, it was trading at 25 times next year's earnings. And then NVIDIA was at 31 times, and we saw more potential to the Broadcom story, moving into a broader range of chips at high-level abilities. But now you've got NVIDIA, which is selling at 36 times, and 31 times, and Broadcom's selling at 36 times. It's moved 160%. Broadcom, and NVIDIA has gone up 60%. Decent move, of course, but it's more attractive, and we wanted exposure to it. We didn't have any, and for the Aureus accounts broadly, and so we thought this is the time to make that investment when the stock has given us the opportunity to buy it at a more attractive price.
All right, so I'm going to come back to you in 2 seconds because there's a related move that I want to get to, but back to the conversation at hand. Again, so buying NVIDIA in your Aureus portfolio and trimming Broadcom.
Yeah.
That's it. Why?
It's, I would say, portfolio management. What we're supposed to do is buy low, sell high, and we bought Avago, Broadcom, in June of 2024. The stock is up 160% since we bought it. So it's long-term. It's become a big position. We've added to it some along the way, but we have big gains. We didn't own NVIDIA. We are holding our chip position. We're increasing it overall, but it makes sense to have both. We think that there's more opportunities in NVIDIA with GPUs than Broadcom. It's got a broader base. Broadcom mostly serves the hyperscaler, and NVIDIA serves everyone.
Okay, Joe, so I know you own Broadcom. Cowen is out with an earnings preview for both. Broadcom's target is $405. So a nice upside from here. They maintain a buy ahead of earnings, which are on December the 11th. We're a week out from NVIDIA. Maintain buy over there at $235.
Okay, so I would imagine that price target is 12 months out. And I would say 12 months from now, I could reasonably see Broadcom being at that level. I think 12 months out, Carrie's going to be totally fine in her NVIDIA buy. All I could see is what's in front of me right now as it relates specifically to Broadcom, NVIDIA, Microsoft, Meta, and Tesla. And in each one of these stocks, I'm looking at momentum. That's my strategy. And over the last month, you have seen a breakdown in their momentum score. Their momentum score is lower than it is for a name like Apple or Alphabet or Amazon. And that's why, for me, as I said to you yesterday, I would just sit and observe right now. If you're long, fine. Stay long. You're going to be fine in 12 months. If you want to buy these names, I would just wait a little bit further, let the market prove itself, and I'd rather see the reversal. I'd rather buy NVIDIA at a new all-time high above whatever it is, 208, 209, than actually buy it here as I see momentum weakening and price concurrently falling with it.
If you're a buy high and sell higher investor.
Absolutely. That's the strategy that I
wrote the
and
book
process I live by.
Wrote the book on it. Let's talk about these build-outs. I mean, we alluded to it a little bit with Oracle. Market's obviously been a little bit concerned.
That's right.
About these companies raising a lot of debt to help with the build-out. What level do you get concerned about that?
The question always comes, are we in a bubble or not? Or is this a massive build-out? But if we think back historically, you can go back to the railroads.
Well, you could have a build-out bubble.
You could have a build-out bubble. And so if you think about the last build-out bubble, that was probably dark fiber. WorldCom raised massive amounts of debt. Ultimately, that debt led them to bankruptcy. Verizon gobbled up those assets. That dark fiber was ultimately lit up, and it became the backbone that had a long run for us.
Right, you go around, you lay enough fiber, you go around the earth like, however many times they said back in the day. That was like the metric that they literally
It literally was the metric.
Used.
And if we look at the build-outs of these data centers, the chips' 5-year depreciation, is that even too long? The chips have to get swapped out. Maybe we have new technologies that come like quantum or different types of chips that are more efficient. You look at someone like Anthropic, where Plexo Capital is an investor, and we liked Anthropic because they were laser focused on just thinking about model efficiency, not doing video, just doing text only. And then that led to a focus on the enterprise, right, with better margins. And that led to them now having a new forecast for 70 billion and break even before OpenAI. But now even Anthropic is saying we're going to build a $50 billion data center. So I think when I start to get concerned is once these companies really start to build out financials with the help of investors who can understand, from the case of Meta, what does it mean to have that 27 billion off balance sheet, because they already got hammered because of their margins.
Yeah, but what do you make of how Meta's traded since earnings? That seems to be the one of the hyperscalers.
Right.
Like we're not I don't want to put Oracle in that mix. Of the mega cap techs, why has Meta traded so poorly, do you think?
I think when we think about Meta and the way that we look at both Google, Microsoft, AWS, they have been able to better optimize the build out of the data centers for other products and services that they can offer. Meta doesn't do that. So when you think about Meta, what you're really looking at is the bet that Meta will be able to use AI to be able to monetize their ads better and their ads only. And so the question that I come up with is, why do you need to build out so much? Hyperscalers, AWS, I get that. Microsoft, check, I get that. Google, check. But that's the question mark, especially when it's going to pound on their margins near term, and it didn't even really factor in this 27 billion off balance sheet.
Lastly, do you have any questions at this point about NVIDIA? We're going to hear from them in a week. And if you do, what's the most, outlying?
I think the big outlier is how should we think of, as people that are investors and analysts, how do we think about the life of a chip, right? When do those chips need to be swapped out? Is a 5-year depreciation the right amount of time? Like, those are the questions that I want to better understand.
You're
NVIDIA's
thinking
gonna
about
be
that too?
around.
Because that's one of the things that, Dr. Burry has been posting on social media. Of course, of Big Short fame. And he's been doing it a lot.
Yes.
But he's been talking about overstating earnings because you're underappreciating the depreciation part of the story. Jim Chanos was doing that today, too, relative to CoreWeave.
We don't have the transparency that we need. Even with Microsoft, since Microsoft uses the equity approach to valuing their investments, we don't know, once that investment goes to zero, they're no longer obligated to really give us insight into OpenAI's losses that they're taking part of.
All right, I hope you're all doing well today and staying calm in this market. Today, we got very strong earnings and very strong guidance from NVIDIA supplier Foxconn. AI rack shipments for the quarter grew 300% quarter over quarter. And according to the Financial Times, Foxconn said AI server shipments will almost double from this quarter to the next. And that doubling AI server shipments next year is a, quote, conservative estimate, as they are seeing, quote, explosive growth. This all bodes very well for NVIDIA. As a reminder, Blackwell Ultra production was expected to ramp substantially this September, and Foxconn's very strong earnings and outlook appear to be another proof point that Blackwell Ultra production has ramped substantially in a very short amount of time and is continuing to ramp strong. As a reminder, we're expecting revenue growth acceleration to be present on NVIDIA's earnings report next week, given their Q3 guidance, and that is thanks largely to the swift production ramp of Blackwell Ultra. In another strange piece of news today, a government official from the Mexican state of Nuevo Leon claimed that NVIDIA was planning to build a $1 billion green data center in the state. According to Reuters, NVIDIA has denied such plans, saying, quote, NVIDIA does not have financial investment plans in Nuevo Leon. I'm not really sure what's going on with that situation, but Reuters says that NVIDIA has denied it. I want to talk more about NVIDIA in a moment, but really quick, I want to address Iron because the stock has been moving lower over the past week. This is due to a lot of other neo-cloud and AI utility stocks trading lower in recent days due to multiple events. We had CoreWeave trade notably lower after trimming Q4 guidance due to some delays, and there have been some other events happening in the space as well. I continue to be bullish on Iron for at least the next 1 to 2 years, and I'm viewing this pullback as a buying opportunity. Please hear me well. I genuinely think that Iron will move notably higher over the next couple of years based on the fundamental trajectory of the company. But there will inevitably be pullbacks along the way, and we need to be prepared for those. I want to remind you that Iron will most likely sell whatever capacity they can produce over the next couple of years, as the world is both severely compute constrained and constrained on power. Iron should have the compute since they are now an NVIDIA preferred partner, and Iron has roughly 3 gigawatts of secured renewable power. Iron has what the world needs, and they have a track record of delivering on what they promise. Iron is guiding for an AI cloud annual revenue run rate of $3.4 billion by the end of 2026. At $3.4 billion in ARR, at a conservative price-to-sales multiple of 10, you're looking at $34 billion in market cap, so a little more than a double from where Iron is currently. If you apply what I think is a more reasonable price-to-sales multiple of 15 to $3.4 billion in ARR, then you get a market cap of $51 billion, more than 3x Iron's current market cap. I'm not going to go through all of the details regarding Iron right now, but I just want you to understand that I am viewing this as a long-term investment for at least the next 1 to 2 years, and I think there's material upside over that time purely based on the fundamental trajectory of the company. I seriously encourage you to research Iron and consider it from the perspective of a possible long-term investment. I don't really want to do this, but I'm once again going to share my thoughts about Michael Burry's recent post on X because the financial press will not stop talking about it. It seems that the financial press has moved on to a new buzzword. First, it was the term AI bubble. Now it's Michael Burry. We recently got a new post from Michael Burry. As a reminder, Burry disclosed large put positions in both NVIDIA and Palantir stocks as of the most recent filing. In his post, Burry claims that the hyperscalers are understating the depreciation of GPUs and that by extending the useful life of those assets, they are artificially boosting earnings. I find multiple problems with this analysis. Before I say anything else, we need to acknowledge the elephant in the room. The entire world is severely compute constrained in the face of extremely strong AI demand. And therefore, developers are willing to use whatever compute they can get their hands on, including compute that, under normal circumstances, would be considered older generation. As a result, the useful life is extended. Additionally, NVIDIA is constantly improving previous generations of their hardware through software. Jensen has spoken about this at length in the past. NVIDIA is even still making improvements to Ampere, for example. Continuous software improvements also help to extend the useful life of the hardware. Right now, Blackwell Ultra is ramping strong, but the reality is that many of the AI models that are in use today were not even trained on Blackwell. Many of them were trained on Hopper, and many were even trained on Ampere. Additionally, on the topic of the hardware's useful life, we have to consider one very important factor, and that is inference. It's not enough to simply train AI models. You then have to provide access to those models at scale through real-time inference. This drastically increases the need for more compute. And by increasing the need for more compute in a world that is already compute constrained, you thereby extend the useful life of the hardware that is available even further. If we thought training required a lot of compute, what about real-time inference processing billions upon billions of tasks every single day? I disagree with the premise that the hyperscalers are claiming a longer useful life in order to artificially boost earnings. Rather, I think that what's really happening here is that the hyperscalers are simply coming to the realization that the useful life of the hardware is longer than what they originally estimated, driven by both continuous software improvements from NVIDIA and a shortage of compute in the face of extremely strong AI demand. Ironically, the fact that the hyperscalers are now claiming that the GPU's useful life is longer than what they previously thought is actually a good thing. It means that both the hardware and demand for the hardware are both holding up strong, leading to a longer useful life. Now, if we eventually get to a point where the world is no longer compute constrained, then that changes things. But I think we are at least 3 to 5 years away from something like that happening if it happens at all. Jensen appears to agree with this time frame, given his comments on the BG Squared podcast back in September. I will say one final thing on the topic of Burry before moving on. Burry's put positions were reported for the period ending September 30th. If you look at a chart of NVIDIA, you will find that the highest price during the reporting period was $187.35. I've marked that price on the chart with a red horizontal line. And NVIDIA is now trading above that price at the time of recording. Why is this important? It means that Burry is likely holding a loss on his NVIDIA put position if he is still holding it. Keep that in mind the next time you see a post from Burry about the build-out of AI infrastructure. I'm not saying that we should completely ignore what Burry has to say. I am saying that we need to be cognizant of the fact that Burry has a direct financial incentive to cast out on the build-out of AI infrastructure. Keep that in mind the next time you see a post from Burry about the build-out of AI infrastructure. As for earnings, we're expecting to see revenue growth acceleration based on NVIDIA's Q3 revenue guidance, thanks in large part to the swift production ramp of Blackwell Ultra. I'm also expecting to see revenue from certain large-scale sovereign AI deals show up either in revenue or revenue guidance on either NVIDIA's Q3 or Q4 reports. I'm also expecting a surge in compute demand fueled by agentic AI that extends well into 2026. Jensen seems to agree with this based on his previous commentary about agentic AI, and I think agentic AI will likely be a key topic on the earnings call. Jensen told us last quarter that he expects reasoning agentic AI to be a major growth driver in 2026. It would also be nice to get another update from Jensen about Rubin on the earnings call. As far as we know, Rubin is still on track to launch in 2026. If Jensen confirms that Rubin is still on track, that would be a positive. While I'm expecting a surge in compute demand from agentic AI that extends into 2026, I think the next major surge in compute demand will likely be fueled by physical AI. As I've discussed in previous videos, this is not getting enough attention right now, but I think it will get a lot of attention in 2026 and especially in 2027. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack. Physical AI will fundamentally transform society, and NVIDIA stands to benefit massively. This is not getting enough attention right now, but I think it will get a lot of attention in 2026 and 2027. In addition to physical AI, NVIDIA has multiple other large long-term growth opportunities, including sovereign AI, enterprise AI, many AI-native startups, telecommunications, and 6G and quantum GPU supercomputing. Jensen believes that quantum computers will not replace classical systems, but that they will work together and complement each other. These additional opportunities in customer segments will increase the need for compute even further. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.